If you could detect the early part trend early and get out before, somewhere near the top, you're going to make money. Pullbacks happen. Mean reversion happens. The specific mechanics of how you detect it, there's 100 different ways to do it that it can work. But those basic market attributes there's edge in. And so I just kind of quit trying to chase all these little esoteric things. And I just said, okay, let's go. What do we know to be true about the markets? What is the fundamental edge here? I quit trying to learn at the detail level and I started thinking big picture, conceptually.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey guys, welcome back to Market Mamas. And my interview sessions are literally probably my favorite because I get to talk to another trader. And I think that that's so much value we can come from these conversations because we get to figure out what other people, how they have come through their journey and their experience and what lessons have brought them to their most successful points. And so today I'm very excited. I have somebody who's pretty well known in the internet world of trading, and that is Scott Allen. So let's get into it and learn kind of all about who you are, where you came from, and how you've grown as a trader. So welcome to Market Mama, Scott.
Great to be here, Becky. Thank you so much.
Yeah. All right. So when did let's figure out how you got to this world. When did you start trading? And what did that look like for you? What were you doing before? Tell us.
I started trading. A couple of my sons actually started a business in Bitcoin mining. And so I got into that in 2021, and 2021 was an amazing year for Bitcoin. We were expecting it to take 3-4 years to pay out, and the miners paid for themselves that year, which was great, except, it had one big run up and then a pull down and then another big run up past that. And I didn't even really know that much about trading, but I'm going to come back to that. But I didn't know that much about trading, but I had a sense that it just kind of had this intuitive sense that it was overextended, and that hodling Bitcoin, watching the volatility that happened just in 2021, that hodling Bitcoin was not the strategy that would work for me. I wasn't going to weather those peaks and valleys that well. And I started researching, but I'm also like, I'm not going to sit here and manually trade it. And so I don't even know exactly where I heard about it, but I heard about this crypto bots. And so I started researching crypto bots, and I found my way to, and I'm an ex-programmer, but it wasn't going to sit there and write crypto bots from scratch. So I looked for no-code crypto bots. And so I found my way to grid bots, 3 commas and Pinex and some of the other things that were out there offering grid bots. And that I still trade my crypto today in grid bots. So I'm a big fan of them, but I also explored a bunch of things that were out there. I don't know, Crypto Hero and Santa something, a bunch of different ones that I explored, Grasshopper, anyway, whatever their crazy names were. But so I also then was learning, all the indicators and how to build no-code bots off of indicators, and which ones actually worked and which ones actually didn't. And so I spent most of 2022 doing that, and it was kind of interesting because 2022 is terrible for crypto, for Bitcoin. But what I realized was that the approach I took, and I will still say that I claim 2022 as profitable. If you look at the dollar value of my account, it wasn't. But with the goal being that what I wanted to do, I was bullish on Bitcoin long term, and that I wanted to do was stack sats, right? I wanted to accumulate Bitcoin. And the crypto bots were amazing at accumulating Bitcoin all the way down to 16K and all the way back up. And so, yeah, it was 2022 wasn't a winning year in dollar value, but when it got back to that price, I had a lot more Bitcoin.
Yeah.
So,
It was a year of building your
and
position.
others. Right, exactly, exactly. Not exactly dollar cost averaging, but the way grid bots work is pretty interesting. It's basically the same way market makers work. It's every time it goes up or down $1,000, you buy and sell it, and you make it on that arbitrage. And I mean, Bitcoin doesn't move like this. Bitcoin moves like this, right? And so on all that motion, you're making money on that, on the volatility, and that's what got me into the trading. And but backing up a little bit, before that, I had like 20 years experience in the financial industry in capital markets. But I was working, I worked with a company in the 2000s that we were taking companies public on the over the counter bulletin board. And so it was companies at that stage, startups that were looking to raise capital. And so I had that experience. And then kind of immediately before I had gotten into trading, I had built a marketing agency that was doing what we call investor acquisition, which was under sort of the newer version of that with Reg A fundraises. So if people may have heard of sites like Republic or some of these things where you can go and it's sort of crowdfunding on steroids, right? Instead of being a $1 million raise, it could be a 50, 60, $70 million raise, but still crowdfunding open to the public. And so I had that background, so I kind of knew a lot about capital markets, but all I had ever done investing wise was just index ETFs. And I think maybe in my 401k, I think I had 2 index ETFs and a REIT ETF or something like that, right? And that was really all I had ever done investing wise. So after I kind of got bitten by that bug with the crypto trading, I was sitting there going, okay, I have my 401k just sitting in like index fund and Microsoft or something like that, because my brother-in-law had said that was a good investment or whatever. And
Reliable.
so right. And so then I got into figuring out, okay, how can I do better with my IRA? And so then I started learning about that. And how can I beat the market in the IRA? I know I'm kind of going all over the place here, but I had watched my mom lose half of her retirement savings twice in the dot-com bust and the great financial crisis under the advice of professionals, right? And that just made me sick. It made me sick in my stomach. And I said, there's got to be a way to do this. And you sit there and you look, they call it the lost decade sometimes. It's 13 years. 13 years that the S&P 500 index took to get from its pre dot-com bubble peak back to that level. And that's not even counting inflation, right? That's not even counting. So and that's just craziness to me. And and yet that's what the mainstream pushes. Oh, just buy and hold the index. Well, if you came out of retirement during all that. So I got really, really motivated about, okay, how do I avoid that? How do I actually beat the market? And then prop firms, and then then I somehow or another I started seeing ads for prop firms, and I'm like, okay, and I can do this because I like to say I don't have ego, but I have a lot of confidence. Like I'm a smart, capable dude with a pretty good, I've got a pretty good career track record, and I was like, I can do this, and this is the most amazing puzzle in the world, right? This is 5D chess, and I'm all over this. Turned out to be a lot harder than I thought it was gonna be.
Trading is so
Um,
hard.
yeah, it's like,
Yeah.
come on, it can't be this hard. So yeah, I mean that's kind of the early stage of my journey was so no code crypto bots, beating the market with my IRA, and then trying to figure out how I could trade for prop firms. So that was
So then you got the
so I
bug
kind of
and
have
you
these,
had
these tracks going. And I had a taste that algo trading could work. And I had a day job and was trying to figure out how I could do that. Also looking at swing trading. So how can I do this efficiently, time efficiently, and not just be glued to the chart for 6.5 hours a day?
Yeah. Okay. So then where'd you go with it? Because then did you dig into day trading or trading with a prop firm or taking more hands-on approach to specific trading daily or?
So I started where everybody usually does, which is a YouTube search, right? And I found my way to interesting. I found my way not to. We'll just refer to them as the usual, quite the usual suspects. I kind of instantly was turned off by Lambos and bro speak, but I did get in. Like, I mean, I'll just say I got pulled into Oliver Velez, who actually is he's
I
actually
love that one.
his strategies actually work, because I actually
Cool.
started trying to take and code them. I started realizing how much of his stuff was actually discretionary, not quite as straightforward to just be purely objective, quantifiable rules. But I started learning from him, and then and I started, and at the same time, right, I'm also trying to code, and so I'm using the MetaTrader 5 wizard to generate EAs and testing those, and going the way you learn any coding. You go find open source stuff and you copy it, and you learn to make one little change at a time. And it's like, wow, this thing might actually work if it had a variable stop loss instead of a fixed pip stop loss or whatever it may be. So I just spent so much time kind of doing all that in my own little bubble. And, I started getting to the point that I produced some things that looked really amazing. And the thing at the time was the prop firms at the time had time limits. And long story short, the trading objectives to do within 30 days were insane. They were not the kind of thing that what I now know to be any kind of good, sustainable risk management and appropriate levels of risk were going to hit. And so I was shooting for these levels, and I got, oh, wow, I've got a back test that'll actually produce that. It's got a 28 Sharpe ratio or something insane like that, right? And so, yeah, I got some of these and started trying rolling them out
Yeah.
in live challenges. And guess what? They didn't work so great live. uh, yeah, so that was when I learned all about overfitting and robustness and all that kind of stuff. And so, yeah, I learned that the hard way. Failed about 3, 4 challenges there, kind of when I first started it. And then I got caught. My timing was right when all the mess happened with MetaTrader, and several, I mean, 3 of the biggest prop firms. I had accounts at My Forex Funds, True Forex Funding, or whatever it was, MFF, TFF, and Surge Trader. And I had passed a challenge at one of them, and finally, and but then they all shut down, and so I had, 5, 6. I think I had 500, 600K. No, I had more than 500K in challenges in process, and a 200K passed, but had not gotten to payout yet when all of those things went under. And, those cascaded, and then MT5 went away. And I'm like, I'm an algo trader and my tool is gone. And match trader and DX trade suck. I mean, they don't even have a trailing stop, no customizable. Yeah, I mean, no customizable indicators. You can make them work. I mean, now I can make them work because now I trade pretty much naked charts. But at the time, I was just horrified and just kind of tabled it. I tried getting a copy trading work, and I just couldn't get it working. And so I just, yeah, you kind of just let that stuff kind of sit for a while. So yeah,
That sounds like trading. You have to figure out something. I think this can work. Let me mess with it. Let me tinker with it. Working here. Okay, great. Let me tinker with it more. Then the system changes. You have to adjust. Like there's so much of that in a trader's journey, I feel like. discretionary or algorithmic, that you just have to like, oh, I think this is working. And then you hit a roadblock and then you have to go around that obstacle and figure it out. Like that is, it's so interesting that parallels to so many people because it really is the nature of the beast of learning something as complex and highly variable and volatile as trading, where you just have to constantly adjust and grow and stay vigilant and take in the data and figure out what part needs to be adjusted. Like, and it takes a long time.
It does. And I've said new traders, I kind of try to help with just try to communicating some concepts simply. And I've said before that, and it is really, if you can just get from taking one step forward and two steps back to taking two steps forward and one step back, that's it. It seems like a small
Yeah,
shift, but if
I
you
love that.
can make that shift, that's whether it's in the trading strategy, your psychology, your systems, whatever it may be.
Yeah. It's like the inchworm concept that I love. And I think that was Mark Douglas's concept. But it's the inchworm where you're like, you inch forward and then you pull up your backside and then you inch forward and you pull up your backside. And so it's just like it's nothing fancy. It's not fast, but it's just learning and inching and then trying to suck a little bit less on the back end. And it matters. It adds up.
And it's the same way the market moves, right? And probably probably about the highest expectancy general model for trading is trading pullbacks in a trend. You just got to make your own personal trade, your own pullbacks in a trend in your life and in your psychology and your systems and everything else.
Yeah. Manage the lows and learn from them and adjust so you can aim higher. So what kind of did you have to work through some psychology as you were working through all of that highs and lows of learning trading?
This is an interesting one because God, I recognize from seeing how big of an issue it is for so many people, how essential trading psychology is. I gotta tell you, truthfully, I really never had to deal with it much, and I've done a lot of my own analysis as to why that is. It's I'm getting ready to be 60. Okay, I've had a lot of life experience. I don't know, 18, 20 to 25-year olds coming into this without that. I mean, I feel for them because a lot of that stuff has really helped me with perspective comes with age, right? But there's a lot of it. I have 35 plus years of personal development experience, and some of the things I'll share, some of the things that I think are why I haven't had a lot of those psychology issues. And first is emotional intelligence, right? That's an absolutely essential skill. If you've got awareness of your emotions and control of your emotions, it's not a matter of not having emotions. It's that, forget who it was that said it, but you can have emotions, you don't have to hold your emotions, right? And so that was one thing, was an essential skill around that. I really early on I actually had a couple of good mentors and guides who, one of my first bosses helped me develop a really healthy relationship with money. We lost a big deal or something, and he just said, Scott, it's only money. Don't get upset, don't get upset over it. It's only money. No one's going to the hospital and no one's going to jail. And if you're not going to the hospital or the jail or the cemetery, it's only money. You can always make more of it. And the thing I've told a lot of people in trading is like, if you can't say that, you're trading too heavy. Right. So, I mean, part of it is about developing that attitude, but also if you can't say that, you're developing adjust your position sizing or keep paper trading. And then another one I've had a lot of exposure to Stoic philosophy. And I think Stoicism, really, honestly, it sounds kind of, may sound weird to say, but I think a couple of the best books you could read for working on your trading psychology are, you start with the modern version, which would be like Ryan Holiday, The Obstacle is the Way. And when you're ready for it, go back to Marcus Aurelius' Meditations. And if you can incorporate those into your attitude, your way of thinking, that eliminates a whole lot of the stuff, right? It's kind of like the simple version that people are familiar with, the serenity prayer, right? Help me to change the thing, give me the courage to change the things I can, the serenity to accept the things I can't, and the wisdom to know the difference. And the kind of corollary to that is that the more time I spend on the last one of those, the wisdom to know the difference, the easier the first two are. And so getting really, really clear in your trading as to what's actually in your control and what's not, and the market is not, that it makes it a whole lot easier to deal with.
Yeah.
It's I'm a big fan of also kind of helping people with the analogy of thinking about sports, right? Whatever your favorite sport is, it's we'll say baseball, because like in baseball, pro hitters only hit 25% of the time at bat. Really top tier ones hit 30%. And if you're hitting a third of them, you're world class. You can't sit there and get hung up on every at bat, every game, every swing. I mean, swing and a miss just comes with the
Part of the
territory.
game.
And if you can't get past that, you can't play the game. Go spend some time in the batting cage, get comfortable swinging and missing, and just realize that it's part of it. And it's kind of the same thing with trading, right?
Yeah, those analogies are so good and so on point. I can tell that you really have kind of thought about it, because I love that book, The Obstacle is the Way, and Marcus Aurelius's. I have read both. Obstacle is the Way, I think I've read it a couple times, because it's so on point of like, you have to chill out, basically. Like, you have to not take every little thing so personally in order to sustain in this game, because like you said, you are going to strike out all the time, and that's the game of probabilities, and that's the reason why you have to take risk management very seriously, because in order to win, you have to put risk on. And so then you have to figure out how you can accept that. In my experience, you have to know that this certain amount is not going to derail me emotionally or mentally, because that's just within the threshold of my account size and cost to play the game. It's the market tuition that sometimes it's she's going to win and sometimes you're going to win. And so just figure out the best trading system you can to have a profitable expected outcome where, if you win slightly more and then you lose, and then each trade takes slightly more than what your losses are when your stop gets taken, then that's a profitable system. But to think that you have to win every single one, or you're going to get really upset with yourself and second guess everything, is so highly variable that it's just not really sustainable, for your account, much less your mental capital.
Right, right. I think didn't you have something where you were talking about another thing that kind of goes with this is just having a probabilistic worldview. Humans really like to be deterministic. We like to be Newtonian. We don't like the concepts of quantum physics, of spooky effects at a distance, and all of that kind of stuff. We like I push, it moves, and that's that. And that's just not that's not the way complex systems work. But I was saying, I think, didn't you do something on Annie Duke's book, Thinking in
Yes.
Bets?
Yes.
Yeah.
Yeah.
So that's another one, right? That's
Yeah.
and so I honestly haven't read any of the trading psychology books, because I've kind of found that with these worldviews about what you can control, what you can't, probabilities, emotional intelligence, to me, a lot of what, a lot of, I'd rather work on the root causes. I don't want to put a band aid on it, right?
No one has ever said that to me until just right now in this conversation. And you are so right. Every trading book, I've consumed a lot on both sides of that. And the trading books pull these concepts into trading, like we are doing now, how they are applying to how we've improved our trading strategy. But the core of them is what is in so many other books, just about life and philosophy and approaches to just your own brain. Like Annie Duke's Thinking in Bets was powerful. The Confident Mind was a really powerful one for me. The Obstacle is the Way, Relentless. There's a lot of them that are just about being a strong, steady person and having faith in yourself and settling down and accepting what you can control and letting go of what you can't. And those approaches to being human and then being a trader are the backbone of a successful approach. And it doesn't have to be written from the author who has been a trader for 20 years. These
Right.
philosophies, that's what the money is. That's the power.
I think also I have become a really big believer in the idea of the cyclical thing. So we've got this idea now here that we've said of, becoming a better person helps you become a better trader. I think it goes the other way too, in that becoming a better trader helps you become a better person. Yeah, if you
I
can
agree.
master these things in this laboratory of trading, then you can carry them into the rest of your life.
Yeah. That honestly is what when I started to become profitable is when I really just dealt with myself. Like my coach was like, "Girl, like your edge is there. The issue is your ability to lose and your ego that you need to like figure the heck out." And so he turned me on to a couple books like Dr. Joe Dispenza, Breaking the Habit of Being You, being yourself.
Yeah,
And it was yeah, it was just exactly that of like you have to be different in order to be a successful trader because you have to settle down and accept more and be gentler on yourself. Give yourself grace through the downsides. Cause I think that was a big thing for me too, is like not wanting to admit faults and wanting to perfect imperfections as quickly as I could. But like that's not realistic or necessary or healthy in so many ways. And so, exactly what you said of if you can really stabilize your psychology as a human, that crosses over into your trading executions. A big deal, a big percentage.
absolutely. 100% with you on that.
Okay, so what have you learned through trading that you wish you knew at the beginning? Is there anything, any aha moments that that came with time that you correlated?
There were a couple of kind of big key turning points for me. One of them, I came across, I think the first one that kind of turned me onto it was I came across a YouTube channel called Quantified Strategies. I don't know if you've come across them, a couple of European guys that, and what they were doing is they were just showing really simple edges quantified, and showing them, here's what this looks like back tested over the last 30 years on the index or on whatever it might be. And my gosh, when I started seeing how simple some of these strategies were, pretty much all short term swing trading strategies, right? A day to a week hold time. And I started coding those and testing those, and like, wow, all of a sudden they were very robust. And I started paying attention to what they were doing, and I started, they have an upsell. They give you the basic edge, and then they go for the premium version,
Yeah.
right? And I started figuring out, because I gleaned it out of a couple of them, that the premium versions were usually just a trend filter or volatility filter. And wow, you take this simple edge and you put a trend filter or a volatility filter on it, and all of a sudden you've got incredibly robust, very simple trading strategies. I still, to this day, what I just passed my FTMO challenge with is basically a collection of strategies like that. And when you go through their stuff, it's not all just their stuff. It's there, for example, they do a lot of reviews of Larry Williams strategies and Larry Connor's strategies. And these strategies that have been around for 20, 30 years, and they still work. Not only do they still work as well as they did 20 and 30 years ago in some cases. It's one of the things, like, I run into these people in algo trading and community, and they're like, oh, you've got, well, and in the day trading community, you've got to protect your edge. Don't share your edge with anybody. It'll erode if you share it. I'm like, yeah, no. Now, some will. There are some that will, but there's what I refer to and commonly known as systemic alpha. It's prices trend. If you could detect the early part trend early and get out before, somewhere near the top, you're going to make money. Pullbacks happen, mean reversion happens. The specific mechanics of how you detect it, there's 100 different ways to do it that it can work. But those basic market attributes there's edge in. And so I just kind of quit trying to chase all these little esoteric things. And I just said, okay, let's go. What do we know to be true about the markets? What is the fundamental edge here? And I quit trying to learn at the detail level, and I started thinking big picture, conceptually, right? And that's when I would say was kind of when I had that next breakthrough. It was like, okay, let me kind of unlearn all of these very specific strategies that I learned, and let me kind of not even worry about trying to make money or find this exact precise edge, etc. And I said, let me start focusing on finding truth. what is true about the market, what is true about as a trader, how you need to address those truths. And so, and I feel I wasted Becky, I've got 7,000 plus hours into trading in over 4 years in learning and studying and stuff, and half of that was wasted. Right, at least half of that was wasted. If I could go back and have, if I could have myself as a guide, right? And so when I started instead thinking, what do I know from science? What do I know? You talked about the Ray Dalio book. What do I know? What are the principles? What are the first principles? And not all the layers and false narratives and unsubstantiated claims, unsubstantiated by data. But let's go back to the basics, and even those you have to take with a grain of salt. I mean, I'm a huge fan of auction market theory and Wyckoff, but even Wyckoff, it's like you got to sit there and take some of his stuff and go, that might have been true for his time. It's not necessarily true now, but there's still benefit. But when you start thinking of it in terms of first principles and say, evidence outweighs opinion, right? Show me the proof. What is the extraordinary claims require extraordinary proof? And started taking the philosophical, starting with sort of the equivalent of I think, therefore I am, right? And let's apply that to trading. Let's apply that to markets. How does price actually move? Well, it's an auction. How does the auction work? Okay. And who are the players and what are their real motivations? It's not hunting your stops. It's just they're looking for liquidity efficiently. That's a very different story than they're hunting your retail stops. Right. And so when I started stripping, I didn't even strip away. I started back at the foundation and said, okay, let's only add what we can, what we can prove, what we can verify. And started reading academic papers and industry papers and truly reliable sources, and figuring out how to sift through that. And so that's been the direction of my trading ever since then, is building up. I think I'm up to 29 first principles, and I've got it's in the FAQ on the day trading Discord, and I'm probably looking for one more and then gonna put it out as a manifesto. No, we'll
Ooh,
do.
cool.
But and so that was the big breakthrough, because now I've got a lens through which to process everything, right? I've got a lens to process. Anybody says, "Hey, this strategy works." I'm like, "Okay, why does it work? Does the premise even make sense with what I know?" No, right? Knowing is justifiable belief. How much do we really know anything? It's justifiable belief. What do I have a justifiable belief about that aligns with this? And yeah, so that's been my focus really the past couple of years.
Okay, so I love that because that is a big backbone of my trading strategy now that I have only grown into in the last probably 2 years, is that tuning out the noise, which I feel like is really in alignment with what you're saying, is like, I also feel like I consumed a ton of information, especially with the first program that I started learning with, because I started with a school and didn't even know what a candlestick was basically back then. And they taught me a lot, but they also, there was a lot of fluff. And so then when I moved on to an advanced mentor, he really started like narrowing me down. And what I feel like really changed my whole trading was trying to figure out market structure and like the bigger context of where we're at in all of it. Like, what is the global market doing? What are the larger timeframes doing? What is the sentiment and the trend? And what do the pullbacks look like? How do they present? How do they start? What's the flow of it? Where are the standard deviation bands? Like, how does it tend to react? Where do we tend to get that rebound effect? And so it was less of like specific indicators. In fact, I used almost no indicators now, because instead it's more like, it's like treating her like a person, the market, like Miss Market, like what's the energy and the flow and where is it going and why and what does that look like? And if it were to react there, how does that present? What pattern would I see that would justify this sort of a potential turn? And so kind of almost pulling back from all of the bazillion details you could focus on, and instead trying to just understand the bigger picture. And then when you're trying to execute a trade, then you zero into a specific market like trading plan on what you need to see in order to execute. For me, when I approach trading that way, it allows me to focus so much more and concentrate on the important information and not so much noise. And that's another reason why I like trading by myself. Like I have communities that I could have chatter in my ear if I wanted, and I did try that and it did not work for me. And so when I am executing, I can't have noise to really be good.
Oh, me too. I sit there, people say, I see people wanting to go, let's do a voice chat during live trading. I'm like, oh God, no. I mean, how could I even? But yeah,
Yeah,
no,
I
it's
tried.
yeah, it's there's so much that really could be boiled down to, it is entirely possible, I believe, that you, when you really boil it down, there's basically all price action boils down to aggression, absorption, and acceptance. That's it. Aggression is
Yep.
people are, traders, institutions, whoever it is, are wanting to push the price. They're buying aggressively, or they're selling aggressively, whatever it may be. The HFT firms hop in on a spark, on a signal from that, and they amplify it. So that's why you see so much stuff happen in news reaction, right? They see that move, the HFTs kick in, amplify that move, and then the market makers are just a little bit slower than the HFT firms, and what they do is they absorb it. They make their money off of absorbing all of that aggression until such time as they can either absorb it all, or if it's too much, it'll run through and go past it, or it'll hit a point of acceptance, consolidation. That's all a consolidation is everybody's agreeing on the value for a little while, roughly within a range, or we get the counter aggression. That's it. That's the only three things that move price. You can, who's and whys. I say, cycle is the why, auction is the how. Okay. But it's still, and so if you think about it that way, every candlestick, you can read the Candlestick Bible and try to memorize 135 different specific candlestick patterns and one and
Yeah.
two and three piece patterns. But you can also, if you really just think about it and go, okay, what does this mean? What is the story here in terms of aggression, absorption, acceptance, right? And if you can take that and interpret one candle, two, three, five, 10 candles in terms of that framework, you don't have to sit there and memorize. You don't have to sit there and memorize patterns, right? And yeah, and I think that's a big thing in terms of simplifying it, right? It's just, well, realize it actually is relatively simple. It manifests itself in ways that look complex, but the fundamental drivers are actually really simple.
Yeah, that's such a good example of this whole thing of the 135 candlesticks that could be uniquely defined. But really, what you need to understand is, what is the data telling you? Like, just like you said, are we pushing hard, or are we consolidating, or are we starting to fade? It's more about what is it trying to convey versus the exact title of it. Is it large? Is it small? Is it, small body, whatever? Yeah, that's a great point of boiling it down to the necessary information, not necessarily all the little details.
Well, and especially when you start really looking at candle patterns across time frames, when you sit there and you take a candle pattern and you go down one time frame or up one time frame, it's really interesting to see it in time frames that are just slightly shifted. Like if you want to really kind of, how should I say it? If you want to take the mask off of candlestick patterns, go through and look at the chart from 1, 2, 3, 4, 5, and 6 minute time periods, which you can do you can do it with a premium version of TradingView, but you can do it in MetaTrader. Those are all built-in time frames, and it's really interesting because those aren't neat subdivisions. And what will happen is, if you sit there and you look at the same segment in 1, 2, 3, 4, 5, and 6 minute time frames, you realize that the specific candle patterns are just an accident of the time slicing. They're an accident of where the timing lines up. Look at 2 minute and look at 3 minute and 5 minute, and all of a sudden, all of this, all of these things just fall apart. That, oh, this is good, this is exactly what's going to happen. No, it's really not, because it's not what happens when you just slice the time differently. We're looking at discrete slices. We're looking at chunks
Moment in
of
time.
something that's continuous, right?
That's a great point. So, what was I wonder if it's just like a personality and education basis coming into trading, but I wonder if you have thoughts on why you leaned towards algorithmic trading versus discretionary.
Yeah, there's a couple of reasons. I mean, first of all, I had a background in coding. So, and I think in terms of systems. I'm kind of a system intuitive, pattern intuitive, and I kind of see in that level of abstraction. And a big part of what I wanted from trading was time freedom. Financial freedom, yeah, but I want time freedom too. And so, sure, with discretionary trading, if you get a good system going and you can trade an hour and a half, or 2 hours a day and make your living, and if you can say, hey, today's not a good day to trade, so I'm off today, it is certainly absolutely 100% possible to do with discretionary trading. And I will tell you, I've done it. I've tracked my discretionary results, and I will tell you, I am better discretionary trader than an algo trader. I'm never going to come up with an algorithm that on a risk adjusted basis is going to outperform what I'm able to do discretionary. But I can also have it be good enough. And I also, a lot of things people don't think about, exposure is risk, right? So if I'm in the market, I can lose. The flip side of that, the paradox is if I'm out of the market, I'm not winning. And so if you have a system with any positive expectancy and you're in cash, cash is a position, but cash is a losing position. Cash is, you have an opportunity cost and inflation, right? So with my real money, I'm 100% allocated. I have margin that I can use to take advantage of an opportunity, but I actually my trading account sits at 100%, 100%, or even a little over that all the time. And so then when I sit there and think about, okay, let's say, okay, you're trading the futures. I trade, if I want to trade, I have an opening range breakout strategy. I know that with discretionary, I'm hitting at about 66% at 1 to 2 risk reward. It's good. Certainly good positive expectancy. I can only trade that on one asset per day. And if I algo trade it, I can trade it on ES and NQ and GC and whatever, right? And so I can diversify my risk in that I can trade it across those, or I can trade the ASX Open and the Nikkei Open and the DAX Open and the London Open all before the US even opens. So I can sit there and trade 6 different indices in a day, or I can trade 5 different indices in gold in a day, and none of them are overlapping because they're all done by the time the next one happens. And so, would I rather have that happening than just taking 1 or 2 trades and then having my money sitting there doing nothing the other 22 hours out of the day? It just makes sense to me. So,
That's
but
interesting. That's a
you
great
have to.
perspective.
Well, and you've got to accept it's never going to trade as well as you can as a good discretionary trader, but then it can do other things you can't. I mean, also, and depending, and that's on an orb strategy, right? So you have something that's actually having to scan for the right setup, because the right setup might come at 10 a.m. or 2:30,
Right.
or if it's futures, I mean, futures trade overnight and there's still liquidity overnight. And you absolutely, in fact, all of the drift is overnight.
Yeah.
That's something that
Yeah.
people go, oh, I want to day trade. Guess what? Day trading is 50-50. Day trading expectancy, random trades on an index fund, you've got a 50-50 chance. 100% of the drift happens close to open overnight. So yeah, so if you're around to do it, you can absolutely trade index futures or gold futures overnight. Well, I'm not trading at 2 a.m. Are you? But my algo can if the setup is there. We're in trend, we're in daily trend, we're in 4-hour trend, we have a pullback. Take the trade. So that's why. And I can still always, I mean, I love trading. I can hop in and discretionary trade anytime, anytime I want, any asset I want. That was a big thing for me. People are, I know I'm weird in this, and this is not something I would suggest to people. A lot of people like take one thing and master it. I'm like, no, I have to understand it all, right? I want to be able to trade. I had a thing. I wanted to always be able to take a trade. I had 24/7 I can find a trade. It might be a swing entry that I'm queuing for Monday open, but I can always find a trade because I don't have one strategy. I mean, I don't even think in terms of sort of one specific setup, right? There's 4 basic trades, okay, and 100 ways to detect each one of them. So, on any time frame. Yeah, so there's less noise on the daily, okay, but trading the 1 minute is fun. I even tried going down to like 1 second's a little bit. It's just too jumpy. But I've traded the open on 5 second charts just for to do it. And I did not do as well as I do on the 1 minute. But
Yeah, that makes sense with this our conversation now that you are the type of guy who wants to learn every angle of it. And honestly, that will make you stronger in the long run. I think that if you do niche down early and you figure out one style, one instrument, one entry and exit technique, and a couple of good setups, that can be a profitable system. But if you want to be a trader for 20 plus years, in the first 5 years, learning as much as you possibly can and then cutting out the noise, I think will make you a stronger trader because it gives you so much to choose from that speaks to you that you can understand that you can use to create your successful trading system. And that to me sounds like, a much stronger base to which to adjust and pivot as the market will inevitably change over time. You'll be able to understand it more effectively, I think, when the changes do come because you understand it in a larger way.
began thinking in terms of sort of the broader things in life. We are in a society that is largely geared for specialists. And we, for the most part, reward specialists. And that's for the most part what's expected in the job market. What some people you call them polymaths or scanner personality or multi-potentialite, or the one I like is expert generalists, is that you really get a broad perspective, and then you're actually sort of more like a serial specialist, and you just don't lose the next one. Like in marketing, I always teach people, well, you got to focus on your niche. It doesn't mean you have to stay in that one niche forever. Master one niche, get that going, get it running, then go take the next niche and take that running. Well, and so that's the thing with strategies, right? I mean, right now I've coded hundreds of strategies at this point, right? But right now I'm focused on a couple of things. I'm trying to code what I do discretionary on ORB. Okay. And so I'm practicing ORB. I'm doing replay testing as much time as I can put into it, and taking notes on what did I do different, what did I do that wasn't according to the rules I've built, then trying to figure out if there's rules on that. So I'm taking those notes, I'm taking pictures, and then guess what? I'm taking all of that stuff and loading it into Chat GPT and going, what do you see here? you know, and
Using your tools.
so it's data collection for me. Yeah, I'm making a little money as I do it, but it's well, not off the replay, right? But that's data collection, and that's where I'm focused. And then the other thing I'm focused on ties in closely with that is, can I code? I'm a huge believer that the main part of discretionary edge is actually not the entries, it's the exits. It's actually the live trade management, right? I've done so much studying of like trailing stops and all kinds of different strategies there. As much as I would love to say, hey, the simple solution is the best, it's actually not the case. When you sit there and look at what you do discretionary, if you're not trying to do a quick one leg in and out, if you're planning on holding past the first leg, then you're doing all kinds of stuff, right? You're reading, okay, there was a big impulse. Okay, I want to lock in at least a good chunk of that impulse. Do I want to leave room for, do I want to leave room for a pullback? Do I want to leave a third, a half? How much do I want to leave for that pullback? Okay, we got a pullback and then we got back on trend. Yeah, I definitely want to lock in under that pullback because, or even the first move after the pullback, right? Because if my thesis is we're back on trend, then it reversing on me is breaking my thesis, right? And so when you start thinking in terms of that, of like if you think about each move of your stop being a new trade based on what you're seeing now, not your original thesis, you got to trade what you see. The market's going to change on you. Yeah, you can have a plan. You can have a plan for contingencies, but you still got to trade what you see. And so I'm trying to figure out if I can even how well I can even approximate what I do discretionary in an algorithm. Because if I can, well, then I can put that position management, I can put that live trade management on top of any entry strategy, right? And then really all the question is okay, well, is this a one leg trade? Is this an intraday? Or is this a let your runners run trade? And I imagine in my ideal world, that's what I could simplify it down to is which, do I want a single leg trade, intraday, or let your runners run? And that's all I have to pick. And then the rest of it happens automatically.
Yeah. It's such a great point. And I totally agree. I had that conversation this morning with a trader of like the trade management is really the work of being a trader because you do need to figure out an entry strategy. But then once you're in, you have to sort that out. And exactly like taking one leg is easy, right? It's fast, it's easy, it's slick, you have profits, you could be done, which is totally an opportunity. And I do that sometimes for sure based on certain variables. But if you have runners, if you have multiple contracts, then you do have to sort out where is my first scale and then what do I do with my stop because I can't let it obviously go all the way to the red, but I don't want to squeeze the trade and get myself out when it's still moving. And so there's so many variables to factor in and it is going to look a little bit different in each trading situation. So that is a really great point on something you just have to feel in my experience in order to get good at that fine tuning of a trade management, you just have to be in trades and then feel out how they move, whether it's replay or live, honestly, but to have some contract on and watch it move and move your stop and then figure out if that one gets taken out 9 times out of 10 or if it holds 9 times out of 10, that's a good strategy to put into your trading system. And so you just have to take in that data and adjust and learn how to manage it. So yeah, it's such a beautiful world to figure out.
Well, and one of the things that it's so widely taught is teaching people a fixed R based take profit. Ooh, go 1 to 2, go 1 to 3. I can tell you from having tested it on dozens and dozens of different strategies, and this is also echoed by 2 or 3 other algo traders, quant researchers I know. It's about the worst possible exit. It's actually the lowest expectancy is sitting there and locking in a fixed TP and you hit it whether you hit it or not. And everybody knows, everybody knows the pain of seeing it get 80% to your target and then reversing on you into a loss, right? Sometimes, or the FOMO of, oh, gosh, it kept running. I'm like, well, then why'd you stop it? I'm a big fan of drawing the target, right? And having an idea that based on structure, it's reasonable that this could go to 1 to 2.5, 1 to 3, 1 to 4. But if it reverses strongly on you, you got to protect your profits. You've got to protect your profits. And if it's got momentum, if it's running, when it hits your TP, let it run, right? One of the things I learned actually from And I actually was fortunate to learn this pretty early on with the no code crypto bots, because I could do exits based on, a fixed percentage move or whatever. And what I found just without fail was that doing a conditional exit with a minimum was way more effective, right? So, don't just exit at 1%, exit at 0.75, exit when RSI hits 70 after it hits 0.75%. And that was always, always better, was to sit there and do some kind of conditional exit after a minimum profit was reached. And probably when that minimum profit is reached, you also want to move your, if you're doing discretionary, you move to at least a break even or a little past break even. But conditional exits just statistically have higher expectancy than fixed targets, except in scalping, when it's not even a full leg, when you're not even necessarily expecting to get the full leg, when you're just like, you know what, I know I'm going to hit these, and I know I'm out. If you're in and out in 5 candles, you don't have time to even do the calculations on trailing. It doesn't even make sense to do that. And by the way, that doesn't matter the time frame. I have some of my strategies that are on the daily time frame, and I don't trail because they're often out on 1 or 2 days, because they exit on they exit on strength. They exit on closes higher than yesterday's high. Right? I bought the dip, and as soon as I get that surge, then I'm out, and that's it. And so there's no trail, because statistically it doesn't work. It doesn't work out any better just because of the nature of the motion. But it's just something to be, it's just something for people to be aware of, that's to at least explore conditional and discretionary exits and not be locked into the fixed TP.
Yeah, I always struggle with the fixed ratio targets for me too, because I would contextually see that there is a very high likely target based on levels of consolidation or where market has pivoted previously or supply and demand, that would be, some sort of variable, maybe 1.8 from my risk. And so then I lean more heavily in towards contextual targets versus fixed profit targets. And I haven't really been able to shake that, despite hearing all of the thoughts on it too, because it just works for me, honestly. And so I think that's part of it too, of like, we're about out of time today, but a big part of what I'm hearing from you is that, like, look at it, study it, see what works and what doesn't work, and then figure out how that can work for you and your system and how you see the market, and then like trade it and execute it and learn and adjust and keep growing, because then you can figure out how to squeeze out a little bit more each time based on adjusting and growing as you learn, right?
Right, right. And kind of along with that, just to kind of, we were talking earlier about reading the price action. Like, I will use the word structure because it is the commonly used word. I kind of hate that that's the word that we've decided to use on it, because it implies so much more solidity, so much more rigidity of the framework than is actually there, right? And there's a couple of people who are kind of popularizing, points of interest or zones of interest as a term for, rather than support and resistance, because what it's telling you is that this is going to be a battleground. It doesn't really
Reaction.
tell you what the directionality is going to be. There might be a slight statistical favor one way or the other, but you got to remember, every time you've got orders gathered around one of those points, you've got orders in both directions. Right? It's not just, there's a
Yeah,
bunch of,
it's true.
there's a bunch of sell orders up here. Guess what? There's buy orders up there too, because there's
Right
people
there.
looking
Yeah.
for that breakout. There's people looking for, right. And so
Yeah.
that's all it is telling you, is that there's going to be a battle here. There's going to be a skirmish here. Right. And you've got to wait and see. And so, you've got to wait and see what it is when it gets there, because like I said, there may be a slight statistical probability, but it always can go either way. It can break out or it can reverse. And I always there's probably a way to probabilistically, again, take a super tight stop and bet on which way it's going. I want to see the confirmation. I want to see the confirmation. I want to see momentum. I want to see momentum coming out of that. I say I want to see a breakout, not a drift out. Right?
Oh,
I don't want to
funny.
see it. Right? I
Yeah.
mean, if I just, we had a break of structure. No, you had consolidation just
Points.
creeping up a little bit wider. You had an
Yeah.
expansion of volatility. You're still in consolidation. That's not a break of structure. I don't care what it
Yeah.
may be technically defined as. And so you've got to read. I like to say, energy outweighs geometry, right? That
Oh,
the
I like
that
that.
that the motion you still. And the other way of looking at it is that momentum is the only thing that pays you. Okay, right? Price moving in
Yeah.
your direction and continuing to move in your direction is the only way you get paid. Okay, structure gives you clues as to where that might happen, where it might start, where it might end, but it's still structure doesn't pay you. Volume doesn't pay you. Volume might give you a clue that there's a little bit more strength behind the move, but nothing pays you but momentum. And so, whatever else you pay attention to, got to watch. You've got to watch the momentum. You've got to focus on the most real time price movement read that you can.
Yeah. That's a great point. Yeah, you need movement in order to accumulate dollars. Yeah.
Yeah.
I feel like you're one of the new friends that I could just talk trading with all day long. Like I feel like you really have immersed yourself in
Okay.
this
Yeah.
world and you've gained so much knowledge and expertise. Like I'm so grateful that you came on with me today.
It has been an absolute pleasure, and yeah, it's anytime.
Yeah, I wanna follow your journey and you should come back on the show because I think it's good to just talk about this kind of thing. Like you definitely have, learned some things that have helped you grow and expand as a trader. So I really, yeah, some good tidbits for people. I hope they followed through to the end of this episode because, it always gets better. You get more into the heart of what people have learned and the things that have really changed their trading. And I think you were a perfect example of that today. So yeah, thank you so much for being here.
It was my pleasure. Yeah, people can find me. I'm on Reddit and Discord as the Goat Trader, and pretty active in the Reddit, the R day trading, R trading, R slash trading, and R slash day trading communities. And I'm going to be doing some other writing, but for now, that's probably where my thoughts go on there, and I tend to write pretty long. So I
Cool.
get accused
Hey,
of
and
the wall of text. I get accused of being Chat GPT slop, even when I haven't used Chat GPT to write it. I mean, I do use Chat GPT a lot, but yeah. So
yeah,
that's
but you're also an author. Well, we'll put all your links in the description. That way people can just click on it. Like just go to the show notes right below and you can find Scott in any of those wherever you tend to hang out in the online world. You're accessible. And yeah, thank you for your wisdom today and for giving me the time. And we'll get this episode out so people can learn from us. And happy trading, everyone. Thank you for being here with Market Mamas. Scott, again, thank you so much for your time today.
thanks. Pleasure.
Bye, everybody. Happy trading.